Hello, friends. Welcome to Block Bytes. What a year it has been for crypto. As someone new to this space, I certainly discovered why everyone prefers to stay away from it. As we get closer to the end of this incredible year, it is time to look back at three stories that pretty much dominated the news this year. Three big events happened in succession that further solidified the saying, not your keys, not your crypto. We saw the blatant disregard for any moral and ethics by the biggest and the most popular crypto institutions, ultimately resulting in massive losses to the retail investors. And a big blow to the image of crypto, which was already on shaky grounds. According to Chainalysis, these three events alone led to a whopping $62.5 billion loss to the crypto investor. Let's look at them one by one. In many respects, the CeFi crash that ultimately led to the recent FTX meltdown is traced back to the Terra Luna UST event. Terra was a blockchain with two native tokens, Luna and the algorithmic stablecoin UST. But there was a fundamental design defect in how Luna and UST worked together. As UST started to lose its peg to the US dollar, the chain minted more Luna, which led to the fall of Luna's price and even more minting, leading to a death spiral that ended only with the price of both Luna and UST reaching zero. Luna's $22 million market cap was wiped instantly in a few days, and many individual and institutional investors were left with nothing. While Luna relaunched under a new name, it did not repair the damage, and the crypto sector is still cleaning up the pieces. Three Arrows Capital, considered one of the most significant hedge funds in the crypto field, collapsed after the Terra Luna incident. Its reputation was so great that corporations including Genesis, Blockchain.com, and Voyager Digital lent it billions of dollars. 3AC took a $600 million hit from Luna alone, from a $200 million initial investment. Then it faced a liquidity crisis with its lenders withdrawing loans, followed by price declines for all the major cryptocurrencies, and a price drop of the Grayscale Bitcoin Trust and staked ETH. In the end, 3AC left a $3.5 billion hole in its creditors' balance sheet. When CoinDesk shared its research into Alameda's balance sheet, nobody would have imagined that it would lead to the third biggest meltdown of this year. The CoinDesk report led to Binance CEO Changpeng Zhao tweeting his intentions of dumping FTX's native token, FTT, resulting in another bank run. Over the first weekend of November, the exchange users withdraw over $6 billion in assets. There was still a lot of speculation and uncertainty about the state of the business, with many people removing assets just to be safe. But it was only when withdrawals were halted that the situation seemed genuinely dire. On November 8th, FTX admitted it was game over, and a few days later, it filed for bankruptcy. 2022 is on the verge of becoming the most significant year for crypto crime ever. According to Chainalysis, so far, $3 billion have been lost to hacks, attacks, and exploits. And by the end of this year, it could easily surpass last year's levels. 69% of all stolen tokens was from cross-chain bridges, which again raised the issue of how safe these bridges were. Let's look at three prominent hacks. The blockchain Ronin, home to the largest blockchain game, Axie Infinity, became the site of crypto's largest hack. The network lost $620 million of cryptocurrency after a hacker took control of 5 out of its 9 validators. The block found out that the reason behind the hack was a senior engineer at Sky Mavis, the company behind the game, being duped into applying for a fake job. A malware shared as part of the offer letter allowed attackers to gain control over 4 out of 5 validators controlling the chain. At the same time, they were able to obtain the 5th from an Axie DAO validator. The wormhole bridge, used to move assets between several blockchains, including Ethereum, Solana, Polygon, and BNB, came under attack by hackers who stole $325 million worth of crypto. The hacker faked the verification process on the network while minting wrapped Ether tokens. Once the minting was done, the hacker swapped around 94,000 tokens on Ethereum and the rest on the Solana blockchain in exchange for other altcoins. Although the network offered the hacker a $10 million bounty, it was useless. Finally, Jump Crypto, the network's parent company, compensated for the loss. Nomad, another bridge, lost $190 million to a security exploit. But unlike others, the Nomad bridge incident was not conducted by a single entity or group, but involved hundreds of addresses. Researchers found a fatal flaw within the replica contract on the bridge, which allowed numerous individuals to simply find a transaction that worked, replace the other person's address with yours, and then rebroadcast it. 2022 was not a good year for Bitcoin. In November of 2021, Bitcoin was trading at its peak of over $68,000, which fell throughout the year and is currently under $18,000. The bearish macroeconomic trend pulled it from its all-time high to below 50,000. It then traded between 47,000 and 30,000 for almost 5 months until the Terra Luna crash pushed it below 30,000. The next big capitulation came after Three Arrows crashed. Bitcoin went below 20,000 and traded in the range of 25,000 to 18,000. And finally, the third significant drop came because of the FTX meltdown, pushing it further into its current $15,000 to $16,000 range. All three price drops coincide with the three most significant market events this year. The biggest impact of this price fall was on the miners, as we saw Argo blockchain close its facility in Texas and Core Scientific filing for Chapter 11 bankruptcy. The most significant positive development of 2022 was the completion of the much-anticipated merge. With the merge, Ethereum successfully and without any issues transitioned to a proof-of-stake network. The network said goodbye to miners and welcomed a new array of validators to run it instead. This greatly reduced the network's environmental impact, bringing it down by more than 99% and making it climate friendly. The tokenomics of Ethereum also changed significantly. Since the merge, the network's inflation rate has been substantially lower, with validators receiving fewer tokens than miners. At the same time, it continues to burn tokens relative to its activity level, further reducing the supply and pushing the network's inflation rate to zero and even in negative territory. 2022 has been a dark year for crypto. Its market cap fell from over 2.25 trillion at the beginning of this year to 800 billion in the end. And even the interest in crypto dwindled slowly over time this year. Arguably, the most significant event for retail investors was the demise of centralized exchanges. The following year could see even more CeFi meltdowns as the price pressure intensifies. But there are three critical points that every retail investor must understand. Number one, move all your assets to a self-custody wallet. Second, use DeFi exchanges instead of CeFi for all crypto purchases or trades. And third, if you must use CeFi, use it only temporarily. After you're done with your transaction, move the assets immediately into your self-custody wallet. On the positive side, the merge showed us that beyond the chaos of price tanks and market capitulation, a lot of important work was done by builders who believe in the future of this space. The biggest takeaway from the merge was to focus on the great work projects are doing. Be it the Cardano upgrade, the redesign of the Cosmos Hub and Atom, the entry of Solana Saga Phone, the speed with which Flashbots address the growing concerns around MEV, or the developments made around ZK EVM. Whatever the price of individual tokens are, the hard work and conviction that builders have will certainly reap the rewards sooner or later. I hope you like this video. Relevant links are in the description. Consider liking and sharing, and I will see you next year with another fresh bite. Have a very happy new year. Bye-bye.